we're going to talk about structural integrity study, the SIRS milestones, and how carriers are reacting to buildings that haven't yet reached it. So one of the changes to the statute was that the deadline has now been extended again to the end of 2025. So I do recall a couple of things, and I was going to, we can link this in with the citizens thing as well if you want. I have that on my list. I do recall there were some carriers that were starting to ask to see these SIRS studies, and then they were starting to stand on the fact that, well, if you had to have it done. So if it's not done, we've got a problem. That law has changed. What has your experience been so far regarding carriers in the SIRS studies? Are they asking for it more? If they don't get it, what happens?
Yeah, so, and again, one point of clarity, what the statute might require, legislation might require insurance companies still have their own guidelines. So again, even though it's been kicked down the road until December 31st, 2025, as far as being in compliance, right? Doesn't mean that insurance companies aren't going to ask for it right now and may not consider providing a policy if they can't not only get it, but also then get documentation that any recommendations that are urgent have been addressed already, and kind of what the plan might be for the future. I mean, we're seeing it probably more so right now on the excess liability, umbrella liability insurance policies, the directors and officers policies, general liability policies on occasion, and on occasion, the property insurance policy. And I think we all know where this emanated from, right? That tower collapse on the East Coast in June of 2021. There were significant, property damage, bodily injury, which impacted the general liability policy, the excess liability policy, the directors and officers policy, and the property policy. So we do have one specific excess liability carrier that is requesting a copy of the report, that if they don't get the report, they won't put the insurance. You know what I mean? So there is that out there. But generally speaking, there's always going to be a market to handle it. I mean, so it's not that you're going to go without insurance, but yeah, carriers are starting to request that documentation, and it's always best. And I know the managers I work with here at Newell do a great job. Because when I typically ask for a copy of the SIRS or milestone report, I ask for also a copy of the documentation that shows the urgent items have been addressed. Because that's the first question that's going to come from the insurance company is, okay, you sent me the report, but it said this has got to be done right now. Where's the documentation this has been done right now? And in my business, probably like going for a loan, ideally, you want to make sure that every I is dotted, T is crossed before you put that paperwork in front of that lender or in front of that insurance company underwriter. Because if there's a question and it's unanswered, I think they start with kind of a negative perception. So it's best to get that documentation up front to your insurance agent. Both the SIRS milestone and the documentation repairs have been made, or a plan for the repairs, so that question is not asked. So again, it is something that in the industry is, on a selected basis, carriers are requesting that documentation. It's not prohibiting you from getting insurance. I wouldn't say
with
that.
the exception of
Citizens has its own unique. Citizens is not like a standard market. They have their own requirements. Some of the requirements change all the time. Another client of yours, so I won't mention the name, but Citizens 4 or 5 months ago said if your client, in this case, had a signed contract to put a roof on, they would continue the insurance. Well, more recently, they said they will not consider the insurance until the roof is actually done. So Citizens is kind of a moving target. But yes, Citizens is one of those that does mandate, Fortunately, I don't have a ton of business with Citizens. I got some business with Citizens where it makes the most sense. But yeah, Citizens has their own requirements outside of the standard market too.
And Citizens is trying to depopulate.
Yeah.
Again,
yes,
we're on condo version 4.0 of the bill. Citizens is on version 2.0 of depopulation.
Right.
So I think that a lot of what I figure is happening at Citizens is we don't want to make it too easy or make you really want to use Citizens. We want to really truly be the insurer of last resort because you can't get anything else.
Yeah. Well, and I think this ebbs and flows with the private market too. So when we have a hurricane event like an Irma or an Ian, you see the private market constrict their appetite immensely. So Citizens becomes, in some cases, the first resort or the only resort for folks. But as that hurricane activity, be it Irma or Ian, get far enough in the rearview mirror, you start to see the private market kind of come back in the game. They expand their appetite. It's no longer constricted. Existing carriers, but you also have new potential players to come into the marketplace. And that's kind of what's happening right now. I mean, there's been a handful. I only do commercial insurance. I don't do personal insurance. There's probably been more takeout companies in the homeowners insurance realm. There have been several takeout companies in the commercial residential, which is condo association realm recently too. Just another one was announced, an outfit called Florida Re. They're doing a quote, takeout or depopulation of Citizens policies, and typically they cherry pick is what they do. So yeah, we are seeing that where the private market is now stepping in and actually taking policies out of Citizens, which is good for a healthy market. By the way, all those takeout companies are vetted by the Department of Insurance. I mean, so they have to have a healthy financial statement before they enable them to do takeouts or depopulate policies from citizens. But yeah, that movement is afoot, and I'm not trying to be predict things, but it's afoot until probably the next major storm occurs, and then we'll see a little bit of recession. Citizens policyholder count will grow, and then we'll go through that cycle again. Like you said, it's happened before; it'll happen again.
Yeah, hoping for no storms this year.
Yes.
We're good. We got. I feel like we're way over the curve as far as our number of storms. So
yeah,
it's kind of like when you're gambling. Like the table's hit way too many times. It's got to cool off, right?
Let's hope for that. Let's hope for that. Yeah. But by the way, one thing that I think was on the topic of citizens. Tony sent me a short list of topics to discuss. Was the surcharge. So citizens on January 1st of 2025 changed the way. I'm sorry, January 1st of 2024. Sorry about that. They changed the way potential assessments occur. So prior to January 1st of 2024, citizens had a tiered assessment program, whereas if you were citizens and they had inadequate funds to compensate claims, each of their three divisions, Citizens Wind, Citizens Personal Lines, and what they call Citizens SMP or Special Multi-Peril, could assess you up to 15% of your premium. Now, it was on your renewal. It wasn't like an assessment for an association where it's right now, it was on the renewal, but up to 15% of your premium, so 45% potential assessment. And if that was inadequate, as I recall, they then did a 2% assessment on other than citizens policyholders. And if that was still inadequate, they came back and they could assess either 10 or 15% of all policyholders as many times as they needed to collect adequate funds to pay claims. The new assessment structure with citizens starting January 1st of 2024 is first 15% on citizens policyholders. So if citizens has inadequate funds to pay claims, they can assess 15% on citizens policyholders. If that's inadequate to handle claim activity, citizens can then assess 10% on all policyholders, so citizens and non-citizens policyholders, 10% as many times as they need to collect adequate funds to pay claims. Knock on wood, we didn't have, my recollection, a citizens assessment from Ian or Irma. There was an assessment way back with Charlie or Wilma.
Yes, exactly. I only remember one while I was a property manager, and
it was different at the time. At that time, they assessed all policyholders and not just citizens, as I recall. And the private market kind of stood up and said, "Wait a minute, citizens are not charging adequate rates for the premium, and you're assessing us for their shortfalls or inability to do that." I say that citizens itself, talking about citizens, I find citizens on occasion competitive from a pricing perspective, not from a coverage perspective on inland type products. So outside the wind pool, it just depends on the age. If you got something built in the 70s, maybe that, I've had some where citizens is not a comparable policy. You have to buy two other policies to get something comparable to the private market, difference in conditions and equipment breakdown. But I've had situations where citizens came in at 15, 16,000 on something where the private market was 30 grand. Now, this was more so last year and the year before. Things are starting to change a little bit. Where I do find probably citizens, in some cases, more competitive is in the wind pool from a pricing perspective again, not so much from a cover perspective, because you don't get certain coverages like law and ordinance with citizens. But if you're a building less than 10 million value in the wind pool, then citizens can just be extremely competitive on something like that. But if it's over 10 million or more goes into a different category called an A-rated risk, and the premium can escalate quite a bit. Yeah, so the surcharge structure did change. I emphasize, as I recall, it's on the renewal, so it's not a midterm assessment. So if the price goes up because of the surcharge, you might be able to find a private market placement in lieu of citizens potentially.